So you built a successful business, but now the big question is, how do you turn that into a retirement plan? In this episode, we're going to talk with Ryan and break down some of the strategies for business owners who want to turn those years of hard work into long-term financial security. Welcome into Perfect Game Retirement. I am Ben George and joined as always with Ryan Ledden over at Black Oak Asset Management. Ryan, glad to be with you again today. And as a business owner, I'm sure this is something you thought about a lot, right? I know you all obviously help a lot of business owners, but you probably put some thought into this yourself of how do I actually take what I'm building and turn that into a retirement plan?
Yeah, I mean, yes, 100% right up my alley. Because I got into this business with a bigger firm, and then started working for the firm that I now own. But the person that I kind of worked up underneath, if you will, was 3 years younger than me. So in my mind, when I started working here, didn't really have that thought process. And then they just about where are we 6 7 years ago, and just decided, hey, I'm going to do some this real estate stuff that I had been enjoying doing on the side. So hey, do you want to take over? So I didn't really strive to be a business owner, and it just kind of fell into my lap. So didn't know what the heck I was doing in the beginning, but this is near and dear, because when I first took over, same thing. You just pour money back into the business, and we'll get into that. But a lot of times you just don't think of a retirement plan being something that is necessary to do, because so many business owners are like, well, I'm going to sell my business one day. That's going to be my retirement plan. And I think about that as well. But there's other avenues you need to think of. Once you get good cash flow and once you start building it up, you do need to think of a retirement plan, either for yourself, or if you have employees like we do now, you need to have something for them as well.
All right, so let's dive into this today. I know, for many entrepreneurs, you spend a lot of time reinvesting in the business, but then, that question of what happens now, right, when it's time to step away. And a lot of times I think you kind of look back and you say, okay, I haven't done the work that maybe I could have, or saved the traditional methods. So we're going to talk through this a little bit today. And here's kind of the question that kind of sparked this, Ryan, from a longtime business owner sent this in. And he said, I haven't saved much for retirement because I'm self-employed and I've always pumped so much money back into my business, but now I'm not sure how to turn my business into a retirement income for myself. So have you worked with anybody in a similar predicament? And before we jump into this is something you work with quite a bit, right?
Oh yeah, I mean, it's like I said, it's near and dear to my heart, because there's a lot of parallels. Even though a business owner may be in a completely different field than me, there's a lot of parallels when it comes to that. And you pour money back into the business because you want to get a good return on investment long term, and you want to hand the business over either to a family member or a person that's been working up underneath you, or just sell it, which a lot of advisors in my industry do. They get a buyout or a multiple, depending on what their revenues are each year and what reoccurring revenue they may have. So yeah, we work with a lot of people when it comes to this. So yeah, it does get to a tipping point where you pour all this money back into the business, but then you do need to see the fruits of your labor from your own portfolio. You build it up, and you build up these cash reserves, because there's always the what ifs, and you have a lot of people, especially if you have employees, you have people that rely on you to give them a paycheck, every couple of weeks or every week, or however you pay your employees. So there does get to a point, and that's where we help people kind of educate them and go through kind of their books, and then go, okay, we're at a point now where you're cash heavy, which is a good thing. As a business owner, you need to have cash on hand, but then what can we do with that cash? So for me, it got to the point where I'm like, okay, now that interest rates are a little bit higher, I don't need this cash just sitting there doing nothing. So can you park that cash and still be accessible, but maybe earn a yield on that? But then, aside from that, then you need to start building up those assets for the long term. Yeah, your biggest asset probably is still your business, but the landscape of businesses can change drastically. And I'm aware of that. I realize that our industry can change a whole lot. And I get there's a lot of technology and AI and all that, but you're still dealing with human beings and their money. So there's a lot of emotion in there, and AI doesn't really have emotion, at least yet anyway. And that's where kind of we come into play. But no matter what industry you're in, the landscape can change in a 30-year time period. So Yes, that's probably the business is still probably your biggest asset, but you need to save like it's not. Save like everyone else does who may have a corporate job. They don't have a business to sell. They plow money into a 401k or some sort of a retirement plan for that long term. And a business owner, you have to be the same way.
Yeah, I want to talk about some of the ways to save for people that haven't started doing that. But you mentioned the business is going to be the biggest asset, right? So how or what are some strategies maybe that you can take that business, that asset that you have, and turn it into something that you can use for retirement? Is it best to look at selling it? Is it kind of moving into maybe a passive ownership situation, maybe something different? What do you think are some of the better strategies for doing that?
Yeah, every industry is a little bit different, but some people just want to walk. They want to sell the business, and maybe they have to be retained for a couple of years to kind of keep the relationships. If that's kind of how the business was, if it was more of a service industry, which is like ours. So a lot of times advisors may sell their book, but then they need to be retained for a couple of years just to keep those relationships, so those assets or those clients just don't fall off the books, if you will, because that's what they're buying. It's a service model, so essentially you're buying the clients in that book of business. So usually you have to be retained. Some people just want to be a part of the business because they built it up so much. They're not going to work, 50, 60 hours a week. They want to scale that back and maybe only work with a certain group. So they may sell a partial book, a portion of their book. So everyone's a little bit different. Some people want a big lump sum and just walk off into the sunset. Okay, so now that lump sum, that's got to be our engine. That's got to create our income. How do we do that? What does that look like? Do we do different investments? Do you look at like an income annuity or something like that that guarantees an income stream? So where small business owners sometimes may lose sight of, and I get it, it's a controversial thing, but Social Security. Like if you're not paying yourself that fair and reasonable salary, you're not paying into Social Security as well. And some people may be just against that. That's a personal decision. That's okay. But also, it can pay a substantial amount of money per month if you've been paying into it. So some business owners they try to pay themselves a whole lot less from an income standpoint and may pay themselves in profit distributions. So it's taxed a little bit different. There's some taxes that you kind of don't pay when you pay yourself profit distributions, but if that if that income is disproportionate, then that could be a red flag for the IRS to audit your books, and that's not any fun for anybody. So, but yeah, taking that lump sum or maybe a gradual payout over a 3 to 5 year period, sometimes that's a little bit more tax efficient. The cool thing is there's so many different ways to structure it, and that's the fun part.
Yeah, it is a fun part and something that Black Oak Asset Management can help you with if it comes time to make that decision, figuring out the best plan forward. Now, for this specific scenario, Ryan, when somebody's in this position where they haven't been saving a lot, and I know most people don't put money into the traditional 401ks, right? They might not have the pensions to rely on as a business owner. What are some of their saving options at this stage to maybe start putting some of that money away?
Yeah, and again, it goes back to my point before. A lot of times you're doing this to take care of the people that work for you because you want to have them to be able to retire with dignity as well. So you may not be able to take as full advantage of the retirement plans that maybe your employees are. And there's all these testing rules depending on if it's a 401k plan or just a simple IRA, or if you don't have employees, then you can do a SEP IRA, which you can put a pretty good chunk of money per year in there. You can do a solo 401k. That just depends on how you're paid. And a lot of times that's where we work with their CPA to say, okay, based off of how they're paid, this type of account is better suited for them. So you do have those options to be able to do. And again, if you don't have employees, you have a few more options than if you did have employees. But a simple IRA, you can't put quite as much in as you can as a 401k. It doesn't really cost a whole lot to do a simple IRA versus a 401k is a little bit more costly, but you can put more money into it. So we walk people through that to be able to figure out maybe what's a good retirement plan. But as a business owner, like I said, if you get a large lump sum, maybe you want to spread that over a few years, so it kind of keeps you in a somewhat of a lower tax bracket. That way, it spreads those payments out, and you kind of know, hey, here's my income for the next few years, but then above and beyond that, I need to sock that away and have that engine building so I can create an income for myself down the road. So a lot of different options, a lot of different ways to go through, because a lot of it depends on how the buyout or the sell is structured.
Well, how do you, Ryan, for someone like you, I know you probably thought about this, and for any business owner, how do you go from reinvesting back into the business and that being the priority to, all right, now I've got to shift some money into saving for retirement? How do you do that and still keep the business going strong? Is how do you find that balance?
Yeah, it's tough, and it's almost like that question is very similar to a person asking, okay, my emergency fund, how much should I keep in there? And you hear, oh, 3 to 6 months of expenses. Everybody likes to throw that out there, which that's a fine number. That's okay. But for some, that number maybe needs to be significantly more. It depends on how consistent your revenues or your business is, and for us, we get paid in several different ways. There's some ways we get paid commissions on some things, but for the most part, we're fee based and we just charge a fee on the amount of money that we do manage. So once you build it up to a certain point, you kind of know what's going to be coming in. Obviously, the markets, depending on people's account balance, that can obviously change. So there's a little bit of fluctuation there, new business being brought in. So but we've gotten to a point where we kind of know what to expect. So once you get to that where you kind of smooth that out. Now, obviously, if you have a very salesy commission based type business, you probably need to keep probably a year's worth at least of expenses in there. That would be what I would do. But ours is kind of reoccurring, so we kind of know what that's going to be. So we're on a little bit of a smaller side of that, but it gets to a point where I'm like, okay, that's just too much money sitting there, so we can do something else with that. But we are kind of resetting in 2025, and we're putting more money back in, just improving our efficiencies, our software, our processes, and so the bigger we're getting, you have to build those efficiencies a little bit better so you can grow better instead of just growing and then figuring out those efficiencies later. So I learned that from a friend of mine who's a Chick-fil-A operator. They want to grow better before they grow bigger, and that's how Chick-fil-A has done it. So I want to basically piggyback what they do.
Yeah, definitely a great model to follow and emulate. All right. So if you have questions, speakwithryan.com. You can start the process and find a time to meet with Ryan that way. What would you say, Ryan? How far out should business owners start really be dialing into this retirement planning topic if they're thinking about that transition at some point?
Yeah, as far as selling their business, I mean, I think most business owners, it's on your mind, whether you really want to do it or not. I mean, I'm 47 years old. I don't think about selling my business because I really enjoy what I'm doing. But you have people going, "Oh, you should do this. You should do this." So it makes you think about it. So as a business owner, I think it's something that's probably always top of mind. But really, in that 5 year window of about getting close to kind of knowing, all right, I kind of want to be done. I got grandkids, or I want to do this. I want to be able to do that. So it's going to be different for everybody, but I would at least say 5 years because this stuff doesn't happen quick. When you sell a business, it can take a while because you have to get a business evaluation. I mean, there's so many things you have to get involved. You have to probably get your accountant involved as well. So these outside agencies that you pay to evaluate your business, it can take some time to do. So it needs to be years in the making because it's not going to be a quick thing.
All right, start that process now if you're a business owner thinking about that or feel like you're not in a great position or want to kind of just evaluate where you stand and look forward towards retirement. Ryan and the team at Black Oak Asset Management can help you with that. Again, blackoakam.com or go to speakwithryan.com to book a time to meet with him. Thanks for watching Perfect Game Retirement. Got another episode coming soon. Please subscribe. Ryan, have a good week.
Thank you.